Welcome back to another episode of the Ticks and Trades daily recap and a little bit of market analysis. Let's talk about what they did today. So here's a daily chart of the SPY. They reached a new high and they closed pretty close to the high. And if we draw a trend line here from these highs we've been looking at, this will come into play later. This is actually where one of the levels came from, and they hung out around that area before they got above it. And then there was a zone, which is pretty important, which we'll talk about when we get down into the game plan and look at the 1 minute chart and all the trades that were taken. But I'll say right now that even on all the other smaller time frames, from a daily chart down to, like, say, a 5 minute chart, there's really nothing in terms of a signal that would indicate that the bulls are losing control. I mean, the timing aspect in some cases, there could be a turn, some kind of reset or pullback, but they're pretty strong. I'm just calling this at face value. We've been saying this for a while now. If it talks like a duck, walks like a duck, you know the saying. In this case, if it talks like a bull, looks like a bull, then it's probably bullish until the market shows us otherwise. So we get down to maybe a 5 minute chart. You can see that there's the trend line. This is one of the levels we had. You can kind of see where that came from. And that provided a reaction. And also want to point out something. Maybe we jump up to a 10-minute chart. That was your first initial base hit on the short side. But when they got above this, you have additional validation that this would work for a bullish trade on the other side, because at this point they're above the level. We'll get to this in more detail later, but just want to point out this is a pretty classic bullish consolidation. This big breakup candle, they're consolidating kind of inside this, the body of it, and they're coming down. It looks like probably at the time that the bottom's going to drop out, they're going to go lower. And that's exactly when you'd want to buy, toward the bottom of this. And this type of consolidation will typically play out to above the high of the initial breakup candle that started the whole thing. So the high was 612.88, and they closed at 612.94, a few pennies on top of the high. So, at face value, this is bullish. Where are they going from here? Well, there's a few targets on the upside. We had two zones. They did not get to the highest zone. Let's look at that right now in terms of the levels and the game plan that was sent out this morning. The top zone between 1613.35 and 1613.64, they never got there. But this other zone here, highlighted in yellow, they did get there, and that was important several times. And you can read through the notes if you'd like. Also want to point out something here. I talked about this last night, and I referenced it here, that I just had a feeling that the way they were acting, they were going to gap lower at the open today. They did that. And then they climbed, and if they got back up to the zone, the pre-market, they were already up into this zone, 611, 612. If they got back up there, it would be important, and it was. So we can see now how these levels and zones were important. So another good day if you were playing by the rules. Market opens around here, between these two levels, between 610.88, 609.63. After 15 minutes has elapsed around here, they're coming down into 609.63. So 609.68 would be your operating level to trigger a trade, and it looks like they hit it. I had an order keyed in the system to buy 4 ES contracts if they came down into 609.68. According to TradeStation, the low was 609.68, and yet I was not triggered. Like, it did not fill me in the order. So I'm looking over at the trading view chart, and it was 609.69 was the low. So it was a penny off. So I'm not sure what happened here, but so it legitimately did not fill me in that order. And so that was the trade. Can't count it because it's a near miss. And then when they came back down to it again, I'm not going to take the trade. You're welcome to if you want. In fact, there are a couple cases here. I am curious if anyone who had these levels from the morning tried them again, traded multiple times, because it was definitely possible to get multiple trades, as you can see how they bounce between these levels. But anyway, moving on, that's not official base hit number one because it's a near miss. So here at 610.88 at 1032, whether you adjust that level or not, they went up a 1 penny above 610.89. Perfect trade. But you're going to trigger it at 610.83, say, 5 cents below the level from the morning, and there's your base hit. I was kind of sleeping on the job. We'll look at this later, but I was working on something else, and I saw this spike, and I glanced over just in time to miss this trade. I didn't have it triggered. I should have. So unfortunately, couldn't count that one. Not going to take another short trade here, and this is why. Next time they visited this level, they just busted above. So there's where the risk is if you try to attempt a second hit. So they continued higher, 611.72. I went short there. In fact, I trailed this thing down, so I was still in the position when they came down here, but otherwise that would be a base hit. It was actually, your base hit was down here somewhere. No rules were violated while you're in this trade. 4 points there, and if you, 92? I guess 93. 610.88 was the original level. If you triggered a long trade here, there's another base hit. What are we, number 3 here? You've already traded a short on this level and long on this level, so you're not going to do it. But once again, they worked. You're welcome to take some chances, but we have 3 base hits so far, and then they finally get above, and now they're coming back down. If the timing is right, you're looking at these levels or this entire zone as a chance to go long, which is a recycle trade. And 6/12/10 was 1 minute before my self-imposed cutoff. It was 3:29 p.m. Eastern. So going long there, didn't quite get down to the next level, 6/11/72, but they bounced. And so there's your fourth base hit trade. So 20 ES points if you were strictly playing by the rules. So pretty good day. And this was the other zone I was talking about that they didn't hit, and they're kind of underneath this, and it'll be interesting. They could get above this. I mean, the bulls are not showing signs of slowing down, at least yet. We can watch a recording of the one trade that I took, tried to get into more trades, but it just didn't work out. As I explained, 609.68 as adjusted was not filled. You don't see the order over here as a limit order in the E-mini chart to buy, say, 4 contracts. I was going to go along with 4 contracts, but it was in the system. So if the SPY were to come down, touch 609.68, then I'd be filled with 4 contracts long, and it didn't happen. A little confused at first, but I saw what happened. Just kind of an anomaly here. It showed that it went down to 609.68, but it didn't. Anyway, but when it finally went up to, when it did get up to the profit target, I considered that level done. I missed it and didn't trade it again, although it did work for another bounce. So let me back up a little bit here. So I was not paying attention, looking at another computer doing something else when they spiked up to 610.88. That would have worked great, but I missed it. It wasn't in the system. It should have been. So I missed that level, missed that trade. When they got up to the zone, 611.72, I had an order in the vicinity. You'll see 2 contracts to go short as a limit order on the E-mini chart. There we go. And it got filled there, and I was willing to sell more, 2 more if they got toward the top of the zone. But as it was, they fell down the first time from the bottom here and ended up taking one of the contracts off at a 4-point base hit. So $200. You'll see that in a minute. Let's move ahead here in the interest of time. I'm adjusting this just to kind of get a better price if they were to go up toward the top of the zone. But like I said, they never went that high at this point. So they're coming down. I took one off and trailed the remaining contract down for a fair amount. I really just should have just taken the 4 points off with the 2 contracts. It would have given me $400 as it was. I didn't get that much, and then I'm still in the position when they're down here. Really, what I should have done is just jump out here at this point and then bought here. But I'm kind of hands off at this point, working on something else. Just kind of nice when you're in a position and you got a trailing stop and you're in the money. I don't have to think about it. So I just let this happen and pocketed a little less than 4 points total on those 2 contracts. There we go. So I'm stopped out as they came back up. Then I let this thing go a little longer. I needed the computer for something else. So it was around 1 o'clock, maybe a little after 1 or so. I just stopped the scroll. I saw them kind of come up, bounce, kind of 2 seconds from the end of this. I just let it play, and starts over. They kind of bounced down, and I just wasn't paying attention. So I didn't take any more trades. I missed a few more. I missed 2 more, I guess it was. But there's no sense in complaining when the market hands you a few easy points, a few $100. I'll take it. On the tracking logs, here are the 3 levels were hit, 4 trades because of the recycle at level 5. You can read through this. Should make sense. There's your 20 points. We just explained it all. And here's where you'd be. We just passed 40%, 41% here. Pretty nice for the year. I'll show you February by itself. Remember, we were 23% in January. We're, I think, 18 or so in February so far. We still have another week and a half left. But over to my trades, just the one level traded. It was a net 3.88 points. It was actually 387.50 before commissions. So back over here. So here's February, 18.55%. January was 23.3. This is strictly played by the rules. And just one other thing to point out here, for what it's worth, I'm trading different numbers of contracts. So if I were to take all these amounts here that I've traded, because these are the ones you've seen these trades. I've recorded most of them whenever I can. If you were to take these, and then where am I at here? To 450. There we go. It's 18.6. Is that right? No, it's not. 18.2. There we go. $18,244 based on the trades that I've taken. This 21%, almost 22% really isn't accurate because I didn't start off the year with $50,000. I'm just trading a lot more conservatively because you've seen times where I might have 5, maybe 6 or more contracts in play. So I just like to have a huge buffer of margin. So I just want to point out that the rate of return here is based on if you were trading 2 contracts and doing the same thing I did. Maybe it's not the best comparison, but it's just one way I can show you what I'm doing. But if you're trading every single level strictly by the rules, 2 contracts at a pop, here's where you'd be. one contract at a pop, and you can do the math, figure out what you can afford. But anyway, I think it's useful information. That's why I say I have less trades, but maybe they're higher quality. And this is exactly why. 20 days trading this year so far, and 85% of them have been profitable, whereas 32 days playing by the rules and 75% have been profitable. It's your pick. Still can't complain. The numbers are pretty good. So that's a wrap for today. Another good day. Thanks for watching. I hope you found some value in today's recap. And if you're so inclined, I would like to get some feedback. If you happen to have traded these levels from the morning, if you received the email that I send out and got into some of the trades that I missed, I like getting feedback from those of you who are making money. I understand if you don't want to share it publicly. I'm getting a few emails from people, and that's pretty cool. It's good to have feedback that you guys are trusting the levels and trusting the process. So in the morning, there will be new levels, another game plan, and the bulls continue to go higher. We'll try to find some places where we can have some counter trend bounces. We know the levels tend to work pretty well in intraday trades for relatively small scalp trades, and they add up over time, as you are seeing. So I'll talk to you in the next recap video. Have a great day.